Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. Well, it's the 14th of November. There's a lot going on. It's a Friday, so let's get started. Some really interesting stocks are coming up. First of all, we'll start with Starbucks. We're going to look at Starbucks, Cisco, Big, Alibaba, Crude, Gold, the Dow, SB, and NASDAQ. So a lot to go through today, so let's get started. First off, we're going to start with Starbucks. Put on a monthly trade trial, and you can see one kicked in yesterday at 78.47, 78.10 last, and I would say this market looks like it's trying to make a turn to the upside, and I would definitely want to be long this market. So here's the formation we see. So we think this is just a great support area, this whole area right here. But I think if you just look at this in terms of what we think can happen, just right here, it looks like this is the key area of resistance. So I think if we can get over there, if we can get over this high that was developed on Thursday, then I think we're off to the races. But I want to be long Starbucks. I don't want to be out of this market. I think it still looks good. We've got all of our trade triangles looking right there, plus 100, and that's a strong sign that the trend is clearly on the upside. So I would get long Starbucks. So let's go on to our next stock. This stock is Cisco. It closed last week at 25.32. You can see it's up to 26.14. Looks really, really good to us. I'll give you a quick analysis of this stock, and I really like it. You can see the resistance level right here. Clearly we went over that resistance, and we can measure from this level here, 22.50 to, let's say, 25, let's say 28, 25.50 rather. That gives us really $3 to play with, and I would say somewhere around the 28 to 28.50 level, that would be a target zone for this stock. Really, really like this stock. It's also at a 52-week high, which I think looks really, really good. So this would be a great Friday trade rule. Cisco, right here. Don't miss it. Next stock is Big Lots. Love the symbol. It's just big right here. And you can see how this market is clearly broken out to the upside. Again, we've got this great formation in terms of what we like to see. Nice base building. Take this across here like this. Wow. Over the top. Signal came in yesterday rather, at 48.52 right there, and it looks like it wants to go higher. Currently trading at 50, just over 50, so a little bit of a profit, but nonetheless it looks like it wants to go higher. So again, if you measure from this level here, I'm just going to be very conservative, 42 to, let's say, 48, which I think is very conservative, 48.50. That gives you $6. So I would be looking somewhere around $54 to $55 as a target zone for this stock. Big Lots, symbol BIG. I love the name. Next stock, Alibaba. We've been, even though we don't have a lot of trade triangles here because we haven't been trading long enough to generate a monthly, but you can see that our weekly kicked in very nicely. We got long this stock, and we've done very well catching most of this move on the upside, and I think this is what we like. So the market came up, really loved it, and we had one of our members asked about, was this a Twin Peaks? I wasn't so sure about Twin Peaks, but the one thing that did catch my eye was this level here. This is a negative engulfing line, or a bearish engulfing line, which means the body of the candle totally engulfs the previous candle. That's not a good sign. Now if we close lower, and this is the key, if we close lower today, this will be a top for Alibaba, at least in the interim. So we could pull back possibly, to the $100 mark, wouldn't be too much of a stretch. We closed last Friday in $114.38, where $114.89, just a smidgen up higher for the week. If we were to close below the 114.38 level, I think that would also be a negative. But we'll see how we close today. If we close lower than Alibaba, we think this will be a confirmed top in the short term. Next, the market that no one loves, crude oil. You can see we continue to just evaporate in this market, and every sort of rally has been really hasn't gone anywhere, but the trend clearly is down. Our trade triangles are all negative, minus 90, indicating a lower level. We could potentially see this market go down to the 70 or even the $65 level for gas, which would be amazing. So here's what we're looking at in that to give those predictions. So let's just clear the screen and scope this out a little further so you get a bigger picture. And I'm just going to go to a take all our trade triangles off, just go to a very simple line chart. What I want to show you is just look at how this market has really sort of stayed in this really wide trading range for really since the first quarter of 2009. So for like 5 years we've just sort of gone nowhere, and suddenly we've broken out. So we think you could take this level here and really take it down to at least to this zone here. The 65 level would not be out of the question in our opinion. Another market no one loves is gold. You can see quite clearly this market had made a really big top over a extended period of time right here, and the break below these levels, that was one of the key area that gold broke through, which is right here. You can see it really started taking it on the chin, and right here this is another key level. Triple bottom breakthrough, not a good sign. We could see gold going to at least $1,000 on the downside. No reason to buy gold right now. On the Dow, you can see the Dow is making new highs, but I want to show you something I'm looking at in the Dow, which is very, very important in my opinion. So let's just go to the 3-month chart, and let's go to candlestick charts, and you can see how this market is beginning to kind of roll over. It isn't there yet, but we closed last week on the Dow at 17,573. We're just about 60 points higher than that right now. So if we close lower on the week, I think that would be an indication of, at least in the interim, we put a top in this market, but I'd be a little bit skeptical of getting overly committed to the long side in these markets right now, particularly in the indices. Same thing with the S&P 500. You can see how it's flattened out for the last 4 days, and we closed last Friday at 2,031. We're at 2,039, so just about 8 points higher for the week, which is good. But if we close lower or flat on the week, it's not going to be a good sign, particularly in my book. Lastly, on the NASDAQ, you can see the push up to new highs. Great, but still, I mean, the NASDAQ is still lower than it was in 2000. So again, it hasn't recovered like the Dow and the S&P to new highs, all-time highs. But look at this market; it sort of flattened out a little bit. It closed 4,632 last week. It's 4,683, about 50 higher for the week, which is good. But nonetheless, I'd be a little bit careful. By the way, one last thing before I go. Take a look at our Smart Scan and look at the 52-week high rule and the 52-week low rule, and see if you can make some money that way. Hey, I'm Adam Hewis. Have a great trading day and enjoy the weekend. I'll see you Monday.